Hi there, good morning. You've tuned into ET Now, and this is Buy Now, Sell Now with me, Shell D'Souza. Along with me, I have Somit Sarkar. A very good morning to you, Somit. Though it's looking like a good morning, given the fact that the markets have seen a recovery from lows, definitely not a great morning coming in for the banks and the NBFCs in particular. We will talk more on that actually in a short while from now. But let's take a look at what the markets are doing at this point in time, because the markets definitely are looking like they're trying to recover some lost ground. At least that's you can say that for the benchmark indices. However, Nifty is trading below the 19,800 mark. A Nifty bank underperforming the benchmark indices. We'll tell you exactly why is that underperformance coming from the banking space in a short while from now. So 9-10% downtick coming in for Nifty Bank. Advanced decline ratio for now, it is very much in the favor of the gainers. Talking about the list of gainers and losers in trade, then you have SBI Life that's trading higher by 4.5%. HDFC Life trading higher by 2.9%. Asian Paints, Apollo Hospitals are the other set of gainers. Asian Paints has gone ahead and taken a price cut. That's what was mentioned in a Macquarie report. You have Hero MotoCorp also holding on to good gains. While on the flip side, it is the banks that's leading the losses on the Nifty. Axis Bank, SBI, Bajaj Finance and Bajaj Finserv as well declining. Add to that list, ONGC as well is declining in trade today. Remember, the crude prices have slumped, and that's not a positive development coming in for ONGC, Oil India, or matter of fact, Reliance Industries as well. While on the flip side, you have the OMCs that are performing well. Talking about the sectoral indices then, and let's see what they're doing at this point in time. And talking about the sectoral indices, banks definitely are the ones that are taking a sharp knock. PSU Bank Index top sectoral loser. While on the flip side is the auto index holding on to good gains of over 9-10% as well as Pharma. But as promised, Somit, you're here to explain and decode exactly what has RBI done, given the fact that we had last evening post-market hours where RBI tightened norms for consumer loans. Why are banks getting impacted? Why is there an impact on the NBFCs as well?
So what RBI has done is that they have introduced regulatory measures to address two concerns. Firstly, it's the high growth that they have been seeing in the consumer credit side, and also because of the increasing dependency of NBFCs on bank borrowings. Now what RBI has done is they have increased the risk weightage. Now this risk weightage increase is applicable on retrospective basis, which means that for new loans also it will be applicable, and it will be applicable also on the existing loans. Now whenever the risk weightage has been increased, it means that it impacts the lender's capital adequacy ratio directly. Now they have to set aside a higher capital against the loans that they have already given, which means that their capital gets blocked going forward. And because of this, the cost of borrowing also increases, not only for the lenders but also for the NBFCs who are borrowing from these banks. Now there is a 3-point impact of what RBI has done. Firstly, the CET or the tier 1 capital of all the banks and NBFCs go down firstly. Second impact is the cost of funds also increases for all the players, that is banks and NBFCs. And the third point is banks and NBFCs with a lower CET1 or tier 1 capital will have to resort to fundraise to support their growth going forward. So this is the 3-point impact. Now what are brokerages saying? What is the consensus view here? The consensus view is that Bajaj Finance and SBI Card will be impacted the most when it comes to the NBFC space. When it comes to the PSU banking space, it's SBI that gets impacted the most, because SBI's CET1 ratio is below 10%, so they'll have to resort to fundraise going forward for the and this will further come down, in fact, post this new regulations that RBI has introduced, which means that they'll have to resort to fundraise going forward. And apart from SBI also, there are a lot of other PSUs which have a CET1 ratio on the lower side, which could also get impacted. And when it comes to the private banking space, banks which would get most impacted are RBL Bank, ICICI Bank, HDFC Bank, AU Small Finance Bank, Federal Bank and Kotak Mahindra Bank, in this order only, which means that RBL Bank's CET1 ratio will be impacted the most, and Kotak Mahindra Bank's CET1 ratio will be impacted the least in this list at least. And when it comes to other than banks, if you see, Paytm is one stock that brokerages are talking about could get impacted, because at least they don't have any impact on their books, but they take money from these lenders, and these lenders will become now more cautious going forward when it comes to giving loans to giving unsecured loans going forward. Now, one sector that could be a tactical bias for analysts is the housing finance sector, and we are also seeing some kind of up move in housing finance companies in trade today, like Indiabulls Housing, LIC Housing Finance. They are trading in green, and that is because they won't be impacted because of these new norms, because they do only secured lendings and they do not have any unsecured lending in their books, so they stand to benefit. Also, if you see today's chart and trading screen, in fact, insurance companies are also actually trading in gaining in trade, and that could be because some money would be shifting from NBFCs and banks to this insurance company, because earlier people were betting on NBFCs and banks because of the high growth, but given the fact that these new norms have kicked in, the growth of NBFCs and banks could now slow down, and hence some investors might be finding insurance companies as a better bet going forward. So that's the move that we are seeing in the entire BFSI space currently.
All right, so that's two parts to the story. One, what happens to the banks and the NBFCs, and also the proxy plays instead of that would be insurance as well as housing finance.
From investment perspective.
From investment purpose. But the story actually has more legs. Now, banks and NBFCs may approach RBI for further clarity on new risk weightage norms. ET now has learned from the sources the banks want clarity on fixing sectoral limits for consumer loans, and lenders may actually hike interest rate to offset the impact of higher risk weightage. Ankur is here with more details. Ankur?
Yes, sources say that lenders may reach out to Reserve Bank of India on new risk weight asset norms, and these have been released by the regulator after the warning which was given in the last policy. What we have learned through sources is that banks want more clarity on the sectoral limits which has been prescribed as per new norms, and therefore the banks are mulling that they will reach out to Reserve Bank of India and get clarity on the same. Apart from that, NBFCs are worried that the lending which was happening through banks to them may get impacted. In fact, they are worried about increased cost and the source of funding which will get impacted due to these norms. So NBFCs may also reach out to regulator regarding the same issue. As far as the impact is concerned, what we learn is that there are very limited options what the lenders have. Some of the lenders may look to increase rates to offset the impact, but necessarily they have to raise capital for adhering to these norms. Because the regulator has made clear in the last monetary policy itself that lenders needs to be alert on unsecured loan portfolio, and now it has come in form of action by giving direction to increase risk weight assets to the lenders.
Well, let's also get in Avinash to understand his view on this new norms that RBI has given. So Avinash, how do you see these norms impacting the banks? Obviously, we know that CET1 ratio will come down. So according to you, which banks would be impacted the most? And post today's fall, do you find any attractive bet in the BFSI space?
Morning, Somit. My sense is, this measure has been largely been done to control the growth in the unsecured kind of loan portion of the banks and the NBFCs. And I think it's going to be a short-term sentimental negative. We are seeing today most of the NBFCs, the banks, down in today's trade. I think in the larger banks, I would believe that, it would be SBI, then some smaller banks like RBL Bank, which possibly had a very large percentage of the, of their loan book on the unsecured side. Typically, if you look at the NBFCs, typically something like Poonawalla Finance or maybe a Bajaj Finance, or typically, smaller NBFCs also will get impacted, because this is definitely something which, as at a policy level, is definitely a good measure by the RBI. But definitely in terms of incremental business growth is going to be a big kind of negative, at least for the next 3 to 4 months. My sense is that disbursements could get impacted, borrowing rates of NBFCs could get elevated, and that could all get reflected into the profitability numbers of these banks and NBFCs. In fact, AB Capital is also one of the companies which possibly can get impacted because they had a large consumer loan book. So my sense is that, some of the, entities which would get impacted would obviously like to go down and redraw their lending cost. Obviously now what kind of borrowing costs they get from the banks. Those banks and those NBFCs which are well capitalized, which have got good, credit quality levels would obviously not, get impacted immediately. But definitely, I think the mood in the market is that RBI wants unsecured loan, book to be controlled, and where these kind of disbursement which was seen in the last 3 to 6 months were quite high. So I think it's a good measure from a macro perspective, but from a business perspective, I think next 2 quarters could be a little softer on margins. So I think you need to take a conscious call as to avoiding such, NBFCs and banks at least in the very near term.
Right, thank you so much for that, Avinash. And also one of the key points is, Kunal as well as Avinash and Soumit, is the fact that as a consumer, personal loans will start getting expensive, isn't it now? Because the fact that the banks will have to pass on those.
Well, yes, that's what the street is expecting,
Yeah.
and that's what there are a couple of media reports also suggesting that that the banks and NBFCs might have to pass it on to consumers to save some margins in this one. So we'll have to watch out how that pans out, because if your personal loan rates, which are already higher, if they move up more, then there could be much more slowdown. That's what RBI also wants, I guess.
All right. And remember, even during the RBI policy, you had the RBI governor actually touch upon this issue, just kind of spreading out caution on that particular front. But Kunal, coming to you, very good morning to you. And talking about this particular space, banks, do you think that this one will derail the momentum that we are seeing in the Nifty bank? Because all hopes were definitely pinned on the fact that the banks will now lead the rally, isn't it?
Good morning, Cheryl. So I'll not use the word derail, but yeah, delay would be a better word, because I think what we are going through is a kind of a very strong overall market uptrend. So I think in that aspect, it's possible that the markets may get into a bit of a sector churn, and specifically with such kind of news flow, which could impact or have an impact into certain set of stocks as well as sectors for a very short period of time. But that doesn't change the course of the overall markets. The markets would probably play a strong balancing act over here, and I think that's what we're seeing for the markets broadly today, as well as yesterday, where you saw the Nifty IT index, the metal index, etc., which are trying to balance off the potential losses into the financial services stocks or select banking names. But I also believe that for example, stocks like Poonawalla Fincorp, RBL Bank, etc., I think these could actually be good bets if these stocks correct by say another margin of 4 to 5% from their intraday swing lows. So I would probably take that as a very strong opportunity for traders who've been missing out into these kind of names to go for a contra buy into these kind of stocks, specifically if they have a longer term time horizon.
Right, contra buys as RBL Bank as well as Poonawalla Fincorp. But Kunal, usually banks and IT are seen as pair trade, isn't it? So does this mean that your take that IT sector will see a bullish move going ahead still maintains?
Well, yes, absolutely. In fact, I'm very bullish on the IT index overall, Sharon. And my sense is that what we've actually seen is the start of a major global bull market, starting off from the US indices and specifically NASDAQ. And I think that should have a very strong direct correlation to the Nifty IT index. So something which was missing out over the last 9 months, 1 year of the market trend, I believe that could get realigned, where the Nifty IT index can stand to start outperforming. So that's why I'm very bullish on the larger cap IT names, specifically the likes of TCS and Infosys.
All right, so that's the take, a holistic take actually coming in on the entire banking space, right from the fundamental side to the technical side. And Kunal, hopefully we'll see a bigger smile on your face today, because today we've skipped our traditional Pathshala on a Friday to talk more about what this RBI move on the consumer loans means. But on that note, we will slip into a break on this edition of Buy Now Sell Now. When we come back, as always, we'll start taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get you answers for all of your stock related queries. Remember, viewers, you can connect to us live on the WhatsApp number that will be flashing on your screen. Do remember, each time you write to us, to mention your name, the stock that you're looking to invest in. If you're already invested in the stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra as well as Avinash Gorakshekar joining us on the show. A very good morning once again to you, Kunal, as well as Avinash. Thank you so much for joining us on ET Now, on Buy Now Sell Now. And let's take the first query that I have is coming in from Narayan, and he's writing to us from Chennai, and he has Hinduja Global that he's purchased at the levels of 1,125 rupees per share. Kunal, he wants to know if he can average at current price or book losses. Also, he wants to know what's the prospect for this particular counter over the next 1 year.
So I'm not extremely bullish on the stock price. I think it's been going through a sharp correction after a steep rally in 2020, lows from 250 levels for in Global. I think at current levels of 950, 960, even though the stock seems to be have coming back into a major support, but I don't see the stock to give any kind of quick returns over the near term unless the stock breaks past about the 200 DMA, which I think is perched at say close to 1100 mark for the stock price. So I would actually suggest that you can probably hold on to the stock, but if you're looking to add further, then I think add only about that 1100 mark for Hinduja Global.
The next query is from Mani from Chennai, and he's asking about Edge Infra, why the stock is showing weakness in spite a low PE and strong order book. Avinash, what's your view here?
Amit, I think the investor should hold on for the next 12 to 15 months. Very strong order book, a very strong execution track record. And my sense is, the second half of FY24 will be significantly better as compared to the first half. They have a very decent, healthy order book. So that gives a decent kind of visibility to the top line for the next 12 to 18 months. I would suggest the investor should give in a slightly longer time frame of 12 to 15 months and continue to hold on. Better prospects would come in the in the very near term, but at least one should not book out in loss at this kind of time.
Coming to you, this one is coming in from Badri, writing to us from Bangalore, and he wants to know about Som Distilleries. He has 100 shares that he's purchased at the price of 290 rupees per share. He wants to know what's the outlook for the next 6 months when it comes to Som Distilleries. Also, he wants to know if he can add some more at current levels. What's your take on this one?
So I'm bullish on Som Distilleries, and my sense is that the stock looks attractive. In fact, there was, if I'm not wrong, some slew of negative news flow for the stock price over the last month or so. That's why you've seen the stock correcting from I think 380 or 390 levels to sub 300 mark. But I think that seems to be now behind the stock price. A better level to buy or average Som Distilleries would be around 285 to 90 mark. So if you're looking to average further, keep that range in mind, and in case the stock dips down back again to that zone, that's a good zone to try and average out further.
Next one is from Nishi from Bangalore, and it's on two stocks. Firstly, on Cochin Shipyard, 50 shares they have, and at a price of 1025. Should he add more at this price? And the second one is on Bosch, where they have around 6 shares at a price of around 16,120. Can he buy more at the current market price?
So, I mean, this is for me.
Kunal.
So, so I think for both Bosch as well as for Cochin Shipyard, I think you should hold on to both of these stocks. You can look to even add further at current levels. I think specifically Cochin Shipyard has gone through a minor correction for itself. And I think if I'm not wrong, it's almost gone through a 15% kind of a corrective wave over the last 2 odd months. Bosch also has been a bit of a volatile stock. The stock has come back to that 20,000 mark, but I think just about a week or so back, it was almost at 19,300 level. So if you try and look at the chart patterns for these names, they're looking very attractive. I would suggest that you should hold on, and you can also consider buying or averaging out at current levels also.
Right, Kunal, one more coming your way. Sushil from Trichy is wanting to know about City Union Bank. He already bought that stock at a price of 144 rupees per share recently. And the other stock that he is actually having in his portfolio is JP Associates. He has this one in his portfolio since 2007. The buy price was 79. Now he wants to know whether he should buy some more of the stock in his portfolio.
See, JP Associates, it's tricky because I think that stock has come back into a bit of a breakout mode. But I'm just a bit skeptical on in terms of how much can the small cap index continue to rally and how far can they rally because there could be a time when the large cap stocks can stand to gain as well as start to outperform. So that's the only catch where I would not suggest JP Associate. But for City Union Bank, of course, my view is extremely bullish. I think if I'm not wrong, just last week or so, I'd given a buy call on City Union Bank with a target of 170. So I'll stick by with those targets for City Union Bank.
He's from Vishwanathan Nair from Cochin, and Avinash, he wants to know your outlook when it comes to Rajesh Exports, and can he buy this stock right now?
No, I think Somit, Rajesh Exports, my sense is, it's corrected significantly from around 600, 650 levels. And I think, most importantly, their dividend distribution record has been extremely poor. So I think, in terms of shareholder returns, nothing great has been given to the shareholders. And plus, they operate in a business where, the EBITDA margins are hardly about 1% or little under that. So I think in terms of earnings growth or in terms of the growth opportunity, I think there are many other companies, within the jewelry space, if one wants to invest, something like a Kalyan Jewelers or a Titan, where I think, the risk reward could be better. So I think Rajesh Exports should be avoided.
All right, that's the take coming in on Rajesh Exports. This one is coming in from a viewer wants to know about Tata Power. Kunal, he wants to know what will the price of Tata Power be from 1 year from now. He is a senior citizen. This is Uday Singh.
It's difficult to forecast as such, but then the stock is now trying to make a good comeback. So I think if I'm not wrong, it's ending a 2.5 odd year of consolidation after almost a 6x or a 7x jump for Tata Power from the 2020 lows. So which means that the stock has gone through an ample time correction and a price correction. My sense is that the stock, since it's in high momentum, I think could probably surpass the previous levels of 295, 300. And I would probably put a modest targets of say around 320 odd for Tata Power. But the stock has this tendency of giving a surprisingly strong streak of positive outperformances. So keep it a bit conservative. 320 could be a target which you can look out for.
The next query is from Anupam Malik from Kolkata, and he has around 500 shares of Federal Bank bought at a price of around 150. Avinash, he wants to know what would be your target price for the stock for the next 1 year.
Yeah, I think Federal Bank has been doing pretty well. They have a healthy CASA ratio and a very good NRI base. Recently, there have been some reports that one of its subsidiaries is going to go public, so there could be some value unlocking for Federal Bank. My sense is that over the next 6 to 12 months, if the investor can hold on, he could expect a price of at least 180 to 190 rupees. So I think, very good prospects, very well positioned in the market, and asset quality continues to be strong. So I think the next 6 to 12 months, you could expect about 175 to 185, a fair value of, that kind of proportion in the next 12 months.
Another one coming your way, actually, Avinash, Dr. Saran wants to know about Glenmark Pharma. He wants to know what's the future in this particular counter, and he wants to know if he exits exits around 500 shares, which he's already purchased at 616 rupees per share. Would it make sense for him to exit right now, or what sort of price should he exit?
No, I think the stock has already moved up, Cheryl, largely because of the fact that Glenmark Life Sciences is going to be sold off for a all cash deal. And that was the trigger point for Glenmark Pharma. I think on the operational side also, Q2 numbers were decent. But I think in terms of the incremental risk reward, I think one could, expect anything say around 800 to 825. I think at those levels, he could think of booking out some partly, and hold on the rest of the quantity for the near term.
Query is from Kamal from Pune, and Kunal, he would want your view when it comes to BAC for short term, say next 3 to 6 months. Is it a good price to buy?
Yeah, I think the stock seems to be extremely overstretched. Now I understand that it's done exceptionally well, and there was a point when the stock had moved, I think in the last just 3 months or so, from 800 rupees to now 2400 rupees mark. But I would believe that buying these stocks in high degree of momentum may not turn out to be a great risk reward bet. Wait out for a phase of correction. So I think last or start of November, for example, the stock had gone through a 200 to 50 point correction. Like that, if you see another say 300 point odd correction for BAC, and if it comes closer to 2100 mark, that could be a starting point where we'll to start entering into the name.
That's a take coming in on BSE. On that note, actually, we will slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your queries then. And this one is coming from Smita Vikram from Bangalore. Kunal, do you track this counter by any chance? Prozone Realty? Because Smita is holding some stocks at a price of 39.22 rupees per share. Wants to know whether the stocks will go higher from this level.
Don't track the stocks, but
all right. Have you been able to take a look at this stock by any chance, Avinash?
Yeah, I think, Cheryl, investor can hold on here. I think they have a large property parcel in Tier 1, Tier 2, Tier 3 markets. And I think looking at the kind of growth in the real estate market, one could expect a decent performance from the company over the next, say, 12 to 15 months. So I think, the investor should give a slightly longer time frame because it's a smaller company, a slightly illiquid counter. So 12 to 15 months, if the investor can hold on, definitely, he can expect a decent risk reward.
Query is from Chandrasekharan from Chennai, and he's holding MTAR Tech around 50 shares, bought at an average price of 2,640. He wants to know, should he buy more at this level and should he continue to hold this stock for the next 1 year? Avinash, what's your view here?
Yeah, I think my guess is MTAR Technology is a very solid company in terms of sectors like defense, nuclear energy. So I think, the propensity of growth is definitely very well laid out. But in the second quarter, the company posted a very disappointing performance. So I think in the very near term, one could expect a little softness in the stock. But if the investor has got at least 18 to 24 months of time frame in mind, then only I think he should accumulate. In the short term, don't expect any major, fireworks or any major re-rating. But yes, over the next couple of years, if he can hold on, he can definitely expect a decent risk reward.
All right, this one is coming in from Subramaniam PG. He's writing to us from Chennai. And Kunal, he has HPCL 700 shares at a price of 275 rupees per share. He's been holding HPCL since a year and a half or so. Now he wants to know whether he should continue to hold on to it or look to exit.
See, I think this could actually be a good time to start maybe taking out some short-term profits for HPCL. Now, the stock has come back towards, I think, 320, 325 mark or 330 odd mark the last I'd seen. So I think in that regards, this could be actually a good point. We're willing to book our profits over here because the indicators have come back into an overbought territory yet again for these OMC names. So maybe over the next 3-4 weeks, we may expect that these stocks to cool off, see somewhere in the tune of 10% odd over that kind of a time frame. So it's better to then try and buy back at 10% lower, opportunities for these stocks. So I'll advise some book profits at current levels.
Okay. The next query is from Debashis from Kolkata. Firstly, it's on Coal India. He has bought at around 352.45 to get the dividend income of Coal India. So Avinash, he wants to know whether should he hold the stock for the next 3 to 5 years. And the second one is on IDFC First Bank, bought at a price of 87 rupees. Should he buy more at this level for long-term wealth creation?
Sumit, as far as IDFC First Bank is concerned, the reverse merger of IDFC with IDFC First Bank has got completed. I would believe that if the investor has at least next 12 to 18 months time frame, then I think IDFC First can definitely give him a very decent risk reward. Not only have the net interest margins improved, the asset quality has also been very strong. The CASA continues to be extremely strong at more than 50%. So I think all said and done, next couple of years, if he can hold on, definitely IDFC First can give him a good upside. And which was the other company, Sumit?
For dividend income.
Coal India, I would believe, Sumit, I think is a long-term story. I think he's, of course, bought it at a slightly higher level. But if he has a couple of years in mind, then Coal India can be a steady performer. Looking at the kind of appetite in power generation, specifically looking at the kind of demand now which is coming in, I would believe that Coal India can definitely structurally be a very good long-term performer. I think he needs to give in a time frame of at least 12 to 18 months if he wants to get a decent risk reward.
Just taking a quick note on the flashes on the bottom of your screen. If you look at what are the OMCs doing at this point in time, because you've seen a sharp downtick come in all of them actually from the day's highest point. HVCL has fallen over 5% from the day's highest point. IOC has fallen approximately 2.6% or so. Let's take a look at what BPCL also is doing at this point in time. That one also is down about 2.3%. Sumit, if you look at these OMCs, a short while ago while addressing the market, we did speak about how it's the OMCs that gain with the crude price drop, isn't it? But what could be actually ailing these counters right now?
Well, it's inventory losses. What understanding here is that at the start of this quarter, crude prices were at $97 per barrel. And now they have come down by nearly $20 per barrel. Obviously, these companies might have bought inventories at $97 per barrel level, which now they have to sell at around $77. So there would be some inventory losses which could weigh down on their financials in the Q3 numbers. Now, if crude continues to remain at $77, obviously from Q4 again the profits will shoot up. But in Q3, this inventory losses could weigh on the profitability of all the oil marketing companies and all oil refiners, including Reliance Industries, MRPL and Chennai Petrol.
All right, so that could be one of the reasons maybe that's actually plaguing these counters, but sharp downtick coming in the OMC counters from the day's highest point at least. But let's take the next query then, and this one is coming in from Monish, writing to us from Bangalore. And Kunal, he has Den Networks, 1,000 shares at a price of 55 rupees per share. He's holding this particular counter for the longest of the times, but clearly the stock hasn't been moving that much. He's saying he can hold on for the next 1 month. Should he?
Well, you can hold on to it for the next 1 month, but I again don't expect anything major to happen in the next 1 month for the stock price. Yes, in the last 1 month or last maybe 3 or 4 months, the stock has seen some bit of recovery, but then it's nothing as compared to the context of where the stock has been going through a sharp correction. So my only catch is that if you're looking to maybe mitigate your losses and then try and reduce your losses, then I think you can probably wait for another 1 month. And look out for say in the next 1 month maybe a target closer to 65 kind of a range for the stock.
Well, thank you, Kunal, for that. With that, let's slip into a short break and we'll address more viewer queries post that. So stay tuned in into ET Now.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your stock-related query. This one is coming from Sunny all the way from Japan. And Sunny is a long-term investor. He's holding Avanti Feeds, about 1,500 shares at a price of 402 rupees per share. Avinash, he wants to know whether it's the right idea to average Avanti Feeds at current levels or wait for some more corrections, because he's planning to hold on to this counter for the next 2 to 3 years.
I think Cheryl, we can add at the current odd levels. Looking at the fact that Avanti Feeds is a very large supplier of shrimp, feed. More importantly, it's got a very large market in the US market, which after a very long time has normalized now. And most importantly, this company has a debt-free balance sheet, a very good cash flow. So I think if he has a 2-year kind of time perspective, he can definitely add on. I expect better numbers to come in the year FY24 second half and FY25.
Thumbs up coming in from Avinash to add on to Avanti Feeds. But Kunal, do you think some more correction or this level is fine?
I think this level is good enough for you to add the stock price. But then I'm not sure whether you want to park your entire money or major portion of your money over here, because I think at current levels of the market, there are so many large cap names and attractive bets which are also available. So depends on the construct of the portfolio, but I would agree largely with Avinash on Avanti Feeds.
So Avinash, I wanted to know whether do you track the SME space as well, because the next two queries are on SME stocks.
Yeah, I think selectively, Somit, we do track the SME space.
So Vinces IT, have you looked at this company? I believe it's into artificial intelligence. So this viewer has around 1,000 shares bought at an IPO price of 128. He wants to know whether should he hold for long term or book profits.
So I think Vinces IT, he should hold on. I think we have a research coverage on the note also, Somit. Our sense is that not only the artificial intelligence part of the business, but they have got several government contracts, for the IT development kind of segment, which is going to grow quite exponentially over the next couple of years. More importantly, they are leaders in the training business, especially the corporate training business, which is like a cash cow. So I would believe that if he can hold on for the next 12 to 15 months, he can expect a very decent upside. The stock has corrected from a high peak level, but still I believe the medium-term prospects continue to be good. So continue to hold. Next 12 to 15 months, he could expect a very decent risk reward from the current levels.
So the same viewer, that is Sudarshana from Bangalore, wanted to know whether is it the right time to enter Ola Tech Solutions.
This is for me?
Avinash, yeah.
I would believe, Ola Tech Solutions definitely has good medium to long-term prospects, Somit. But I think at the current levels, I think one needs to be a little cautious. If the stock corrects further, and obviously if the valuations get a little more attractive, that would be a good time to enter. If the investor is already holding on this stock, I think he should hold on. Keep a time frame of at least 12 to 18 months.
Next one coming to you, Kunal. Dr. Vadiwala from Pune is asking about GSK Pharma, 25 shares which he has from the price of around 1,325 rupees per share. He wants to know whether he should hold on to GSK Pharma for some more time or look to book profits.
Well, I would suggest to hold on to the stock at least over the near term. Don't need to book profits as well as don't need to average further the stock at current levels. I think it's doing reasonably well. Today also, I think the stock is up some 1% over the last 1 or 2 weeks. The stock is up from 1,400 to 1,600 plus mark, which means that the momentum seems to be coming back into the stock price. I would suggest to hold on.
Well, Kunal, the next one is from Anand from Gurgaon, and he's holding around 500 shares of Jio Finance at a price of around 220 per share. He's asking whether should he continue to hold this stock or just sell and get out of it.
Well, too short a price history, Somit, so I'll refrain from commenting on Jio Finance.
Avinash, your view on Jio Finance?
I think Somit, if the investor has a 2 year kind of time frame, then I think he should hold on to Geo Finance. I think, see, the balance sheet size of 1,30,000 crores is big enough to justify the fact that Geo Finance is going to make a significant impact on the financial services segment. They've also tied up with BlackRock for the AMC business. So I think it's too early to take a fundamental call here. But looking at the pedigree, the kind of opportunity which this company has to grow, my sense is over the next 2 years, one could see definitely very strong numbers coming out from this company. So I think keep a time frame of at least 2 years plus. Only then one could expect a decent risk reward. In the near term, it's very difficult to quantify what could be the short-term prospects. But longer term, I think a lot of money could be made here.
All right, with that, let's kickstart with the rapid fire then. And first one coming your way, Kunal. It is from Ashok B. Tata Chem, 1 lot, November expiry at 9:30. What sort of target should he look at?
Hold on to the stock and expect you to roll it over to the next series. I would expect a target of 1,000.
Well, Kamal Datwani from Spain holds around 1,250 shares in EIH. Kunal, should he exit or hold this counter?
I think you should definitely look to hold on.
All right, Guru Swami wants to know about Bector Foods, 50 shares that he's holding in his portfolio. Makes sense to stay put with this for the long term. Avinash?
Yeah, I think Bector Foods has done remarkably well. I think he should continue to hold.
Bhide from Pune has around 600 shares of Voltas. What is your medium-term outlook, Kunal?
I would be a bit skeptical on the stock price as of now, but I think only about 880 market where you can add a bid position.
All right, this one has come from Syed from Bangalore. Chennai Petro is the stock, Kunal, 500 shares at a price of 402.56. Should he stay put with this or book profits?
I think you should continue to hold on to the stock. Keep a trading stop loss of 600.
Venkatesh from Chennai holds around 171 shares of Aditya Birla AMC. Avinash, should he exit or hold for the next 1 or 2 years?
I think he should continue to hold.
Okay, Ravi wants to know about future of Bajaj Finserv. He got this actually for the bonus and split, but now the stock is not moving. Kunal, what should he do?
I think you should continue to hold on to Bajaj.
Mahesh from Delhi holds around 150 shares of JK Paper, bought at a price of 331. Should he hold or exit, Avinash?
I think he should hold on. JK Paper has done remarkably well, and I think the paper market continues to grow. So continue to hold.
All right, this one's coming from Subrata Mukherjee. Kunal, GSFC is the stock bought at 195 rupees per share. What should he do on this with this counter right now?
Well, hold, and in case if the stock corrects towards the 165 to 170 mark, that could be a point where you may need to average.
All right, and with that, I believe we've come to the end of the rapid fire as well as queries. Thank you so much, Kunal, as well as Avinash, for joining us on the show, talking about the banks in particular, as well as giving resolving viewer queries and viewers. With that, it's a wrap on this week's edition of Buy Now Sell Now as well. So it's a goodbye from Somit, myself, our producer Boski, as well as our director Ravinder. Thank you so much for watching us. Stay tuned. Markets at noon coming up next.